Well, 2021 was another exceptional year in terms of demand for UK grocery-backed assets, with total transactional volumes of £1.85 billion. This was just above the 2020 level and was only stopped from far exceeding it by a dwindling supply of assets.
Supermarket income REIT and realty income were the dominant buyers of 2021 and accounted for just over 60% of all transactions completed by value.
Now, on top of the usual churn of suppliers and buyers, we are seeing a clear trend from institutional funds reallocating out of overweight retail sector classifications through selling supermarkets. And we think there's more to go in that space.
Among the standout transactions of the year was Aviva's sale to Supermarket Income REIT of its 25.5% stake in the Highbury and Dragon portfolio. The portfolio comprised 26 Sainsbury's stores across the UK with a total value of over £1 billion. So far, there's been few stores let to the major discounters like Aldi and Lidl come to the market. But last June, CBRE Investment Management paid £12.5 million for a Lidl store in Weybridge, which reflected a keen net initial yield of 3.5%. And this is a good reflection or a good guide of the potential for these smaller sized assets.
It's not immediately apparent where the next tranche of assets for sale will come from. Speculation continues as to what the new owners of Asda and Morrisons will do with their respective store portfolios. Throughout its history, Morrisons' freehold estate has been sacrosanct, but it remains to be seen how the new business owner will view it and whether a programme of selective sales may be a route to recouping some of the corporate acquisition costs. There is certainly no shortage of willing investors.
On the owner-occupier side, we are seeing growing supply, although still small, from discounters as they grow their overall property portfolios. And we do expect that potentially Asda and Morrisons, under their new ownership, will introduce new supply into the market as we look into 2022 and 2023. During
the year, pricing for UK grocery-backed assets continued to sharpen, with yields for prime supermarkets reducing from 4.35% in 2020 to 4.25% last year. However, the sale of some assets, like the Lidl in Weybridge, which we've mentioned, did see particularly sought-after assets command yields of around 3 to 3.5%.
Well, firstly, grocery real estate is core infrastructure. We've seen during the pandemic just how important grocery real estate assets are to the communities they serve. Overall, we view UK grocery property to be around 100 billion in total size. Our focus on omnichannel top quartile trading stores gives us overall a target market of around 30 billion. And if we can grow to be 10 to 15% of that market, then we can grow our AUM to around 3 to 5 billion range.
Well, with the world still battling coronavirus variants, and the uncertainty facing retail capital markets, I think grocery-backed assets will continue to remain in favour. On the basis that some investors are being less strict in their buying criteria, we'd expect to see a more balanced marketplace develop, and I think properties let with open market rents will become more of a feature in transactional activity. For sellers, there certainly cannot be a much better time to capitalise on this exceptional demand.